Alright folks, welcome back. Well, we've finally arrived. This is model number 12, Algorithmic Theory and Lecture for the scalping model, and it focuses on 20 pips per trade. This one here is kind of like one of those bread and butter setups. These tend to repeat a lot. There's generally something like this every single trading day. You'll have to look through, obviously, a lot of the pairs and futures markets, but something is running out a previous day's high, okay, or previous day's low, or making an attempt to do that. Okay, so let me make sure you have that in your notes. You may expect the market to rally up to take out a previous day's high, but if it offers 20 pips before it gets to that previous day's high, that fits in this model. So I think if you've been paying attention, this is what I said before we even started the charter membership. Okay, before I even started doing price action models, I warned all of you in the recordings leading up to it that you're going to find that these models overlap. There's a lot of similar things, and your mind should be thinking, this looks similar to this, and this feels like that, and because they're all connected. Over time, how much time I don't know, but each of you, if given enough time, working with them, studying them, your mind will start seeing how all of them plug together. And it gives you like this tapestry, how they all connect. When one's doing something and when it ends, another model starts working. So there's always something that moves and gyrates between the marketplace. That's why some days when it's really nice in terms of volatility, I can go in there and I can buy and sell and move from one thing to the next, like Spider-Man, web slinging. And to a neophyte or someone's been trading for a while and they see that in my recordings where I'm doing the executions both sides of the marketplace, getting out at the highs, getting short, going down to the lows, covering short and going long, there isn't a market environment that sees that repeat a lot. But when it does manifest itself, you can use this model for intraday web slinging. Okay, it's very fun to practice in a demo doing it, but I don't want you to think and go out there with a live account and start doing it, because none of you are right at that level yet. Don't be put off by that comment. Trust me when I tell you, especially in the market volatility we have today, in the last 18 months or 2 years or so, it's very difficult, okay, to find real nice pristine symmetry in the marketplace. It's really short-lived when it happens. You got to get it, secure the money, and go. Okay, and try not to be thinking at the end of every trade you just closed, there should be an alternative trade. Okay, that's a neophyte. That is someone that is a gambler and someone that feels like they got to be in the market all the time because they're afraid of missing something, or they're addicted to winning. Okay, or addicted to just the action alone. So this model can present a gambler a lot of problems, and you have to be careful that you don't go in here and try to abuse this one, because it's there all the time, but you have to be careful what you're doing and try not to be a gambler or an action hound or a junkie, put it that way. So this model, it's built on the daily range expansion, so you're not really relying on anything from the weekly, and all you have to do is try to figure out at the beginning of the day, is it likely to run for previous day's high or previous day's low, or expand in either one of those directions, allowing for 20 pips. Okay, so it's really an intraday model that takes advantage of volatility without bias, really, because you could really flip a quarter and heads buy, tails short. And as long as you know what you're looking for through market structure, intraday volatility, chances are you can probably find a 20 pip runner intraday and really be against the daily range expansions. I'm saying that just to get your gears turning, because there's a lot of volatility in the markets today, and sometimes it offers that in a very choppy range-bound market. And if you put too much emphasis on daily range expansion, directional bias, you could miss out on some really nice moves. And I don't want to lay that in your lap and kind of like inspire more fear of missing out. Okay. But I'm speaking to the more refined you as the student, not right now, because you just completed all the models. You have all the algorithmic principles. You have the trading plans. You have the logic. And what's going to happen now is you're going to go through them and you're going to think about which one resonates the most with you. And it may create a hybrid. It might blend one or two or maybe even three of them with your own unique model. You're not limited to just this. I'm not saying that this is all ICT concepts are limited to. I wanted to give you a pretty broad spectrum of what you can do with the things that you learn here. And obviously, I just gave another one on YouTube this year. And you can make it as simple as you want it to be. And today, everybody, without me even talking about what to do, they were out there going short E-mini S&P and NASDAQ, catching the fair value gap after buy-side liquidity and running to sell-side liquidity. And they're elated, much like you will be once you settle in on your own unique model. And it might be that one that I've gave to YouTube. There's nothing wrong with that. But for this little pattern here, this setup or model, this dandy here repeats a lot. And you can trade this in the morning session and you can trade this in the afternoon session. You can be one direction in the morning and the opposite direction in the afternoon, or same direction from the morning and same direction in the afternoon, if you know your market. Okay, and there's a lot of volatility in index futures. And I think this one here, if you treat it instead of 20 pips, if you did something like 20 ticks, okay, that would be about 5 points, okay, or 5 handles in the S&P or NASDAQ. On a mini, one mini, that's $250. There's nothing wrong with that, folks. There's a lot of people that don't even make that in a day, gross, before taxes. So if you're able to get 5 handles, in a session once a day, trading one mini contract, that's awesome. Like my son literally made equivalent to 2 weeks of his income in his most recent trade on the 31st of May. And his elation was, Dad, this is really incredible. I mean, he's had bigger trades, obviously, you'll see some of his statements, but to sit down and say, okay, I only want to do one contract, try to do, what would be my weekly income, because he gets paid, I think it's called biweekly, where you get a check every 2 weeks or something like that. In other words, he gets 2 checks a month. So he has to work 2 full checks before he gets paid. And he doesn't get paid a whole lot. So equivalent to like $400 a week. And I don't pay for his gas. I don't do any of these things. And he didn't complain at all. But he's sick of his job. So we kind of use this model here and a blend of what I taught on YouTube. So if for all of you asking, what is he using to run that account up? He's not using Enigma. He's just learning, folks. I mean, he really doesn't know a whole lot. And I am sitting next to him and I'm telling him, what do you see here? And what do you see there? Am I pushing the button for him? Absolutely not. Am I trading his account for him? Absolutely not. Is he making poor decisions before he pushes the button? Yes. Am I saying something to prompt him to second guess that poor decision? Yes. Okay, so this model has a lot to do with what he does. This one right here. Because he has a very short attention span. He doesn't have a lot of experience, so he doesn't have that, this reminds me of that other trade, or this reminds me of that one time when the market does this or that. He is just looking at old highs, old lows, fair value gaps after short-term little shifts in market structure, and it's easy for him to spot it. So I'm trying to cultivate that. You may not look at this model and see it as something that's viable for you because you want something more heartier, more beefier, something like Model 6 and 7, because you've heard me say that's closest to all of these to what I actually trade like. And I want you to think about how often these little short-term moves present themselves. And if you're able to just lower your expectations and also reduce your, pressure on yourself about doing bigger trades. Okay, bigger is not necessarily better. If you can find a lot of 10-point moves in an index future, I mean, think about it. One mini, that's $500. 10 handles in one mini contract on the S&P, that's $500. If you did that 3 times, that's $1,500 a week. Do you make that a week at your job? How about if you're able to do that once a day? Say get 5 pips, or not 5 pips, but 5 handles in the morning session and 5 handles in the afternoon session. That's 10 or $500 a day, or $10,000 a month. How many of you make $10,000 a month? So when I'm looking at this model, I'm teaching it with the perspective that don't think it's just 20 pips. It might be 20 ticks in the SPOOS market, in the S&P. That would be the equivalent. So you can scale that 20 pip part of it to whatever you want it to be. Don't be afraid of saying, oh, I'm going to just try to do 10 pips in Forex. There's nothing wrong with that. You can do 5, 10 pip trades a week and make 50 pips a week. It's done. You've met your objective. Who's going to complain about that? I just think it's a lot of work. It depends on what you have in terms of your time, what you have in terms of your, what's the schedule like for you? Do you have a whole lot of time to do this? Do you want to be in front of the charts all the time? Do you look at this and not see it as stressful? Because a lot of you are going to discover that being in front of the charts, while it can be profitable, and I can make a whole lot of money if I sit in front of these charts all day long, I can do that. But it wears me out, and it's tiring, because in my mind, I'm racing to get every single price swing how I want it. So what I like to do is go into a specific time of day, and that's why I created the kill zones. So if you limit yourself to any one of these models, try to emphasize time management, because when you start getting good, you will start pushing everyone and everything away, and you'll just be wanting to be in the markets. And all of a sudden, your children will grow up and you don't know who they are. And that happened to me, literally. So if you're comfortable with trading index futures, you can use that 20 as a 20 tick, or 20 handles, or 10 handles. Okay, whatever you want it to be. Or you can use it as pips for Forex. Or it could be 20 ticks in the bond market. Okay, $31.25 each tick. Yeah, that's a good chunk of money. So if you're doing that over multiple contracts as your equity grows, you can turn this into whatever your imagination can come up with. There's no limit. But many of you are going to be in a rush to do this, because you've seen many times me take small accounts, run them up real quick at breakneck speed. And honestly, I wish I could go back in time and undo that. I wish I wouldn't have done it now, because it's made a lot of you feel like that's what's expected of you because you're my student or you've gone through this mentorship. And that is not what I want any of you to think. I don't want you to think that. Okay. Could it be a goal for some of you? Absolutely, sure. You get in there and go crazy, win the Robbins Cup, do something spectacular. I would be the first cheerleader for you. I want to see it. But some of you just don't want that, and you just want to make an income. Guess what? That's this one here. This one right here. It's easy. It's short term. You don't have to hold over day. The whole entire day. You don't have to hold for it. You don't have to hold overnight. No weekend trading. You're in and out just like that. Hit and run trading. Okay, that's kind of like what this is really specializing in. So really looking for the daily range expansion, and that might be just, is the next session in London going to be a session where it expands higher or lower? Or you look at London overnight, what did it do? Does it look like it wants to run continuously in the same direction that London did in New York? And that range expansion inside the daily range, okay, it doesn't need to be the full daily range. You just need the expansion inside that same daily candle. Much like we were discussing throughout the entire mentorship with these price action models, we are looking for an expansion on the weekly range, but we're not trying to pick the closing price. You know what I mean? So it's like we're looking for a flurry of action, like this little moment of excitement where it's going in a direction we are looking for, but the technicals and time and price all come together perfectly. And then we can engage. So I'm going to take you into an example here and try to walk you through something that would have been feasible with this. This is the dollar Swissy, and this is a pair I admittedly can't stand, but I know some of you in here trade it. Here is the daily chart. And looking at the daily chart here, you can see that we have a fair value gap here. We have what will be equivalent to a potential swing low forming in here. And there's been 2 up close candles. And it might want to expand up into that fair value gap. Now, I do not need, and you don't need it to actually get up there. But that's enough to build in a short-term bias going into the next trading day. And if we open below this candle's high, does it give me an opportunity to run that high and get 20 pips? As you can see, the market does, in fact, open. It trades down to an order block level here, hits it, rallies up, expands through the previous day's high. It does not get the fair value gap discount low. It does not need to do that. All right, and on the 5-minute chart here, here's the example of what this model is looking for, and it's something you've seen many, many times. It's nothing new. I'm not creating something new. I'm not reinventing the wheel of ICT. You've seen this before many times, but we have the previous day's high. You can see we swept that, and then it comes back down in to an order block here. We wait for an expansion swing. It creates it. It breaks a swing high up here. So all the structure here is broken to the upside. So we have a shift in market structure. It trades back down into the fair value gap that's created right here. This low is taken out by 1 pipette right there. Guess what that is? That is your institutional order flow entry drill. But the pattern is what? Fair value gap. So you can be a buyer there, run to the previous day's high. So if you're buying here at, we'll just say you got filled at 96.05. Worst case scenario, you got slippage, you were slow. It's just, it is what it is. 96.05 was your fill. Okay. 96.15 is 10 pips. 96.25, guess what that is? That's your 20 pips. And it doesn't even take out the relative equal highs up here. And you can leave a small portion on to see if you can catch a runner. And there you go. So this is like one of those always in your back pocket model where, you know, if you want to do an exercise with yourself, okay, go into a random pair that you don't like to look at, you know, a lot, and during the New York session or during the London session, open it up and do a quick exercise on what you think it's going to do, running out what direction, and then look for this pattern. And I promise you, you will be surprised how easy it is to find this just like that, because you know what you're looking for. What makes this pattern and this whole model here not as sexy is because it doesn't have central bank dealers range, an Asian session range, and flout. And it doesn't have any standard deviations across the chart. And it doesn't have breakers. It doesn't have all the things that you want to apply to it. It doesn't have COT. It doesn't have seasonal tendency, because you want a PhD at the end of your ICT student name. PhDs are not required to be profitable in the marketplace. All you need to do is have something that works, that really resonates with your personality. And this is one of the stripped down versions of all of them. The only thing that's less than this one is what I showed on YouTube. So the most simplest one is YouTube, and then this one here. Both of them can create a career where you don't need to do anything. You don't need to look at anything else. You don't need to complicate anything. Where's it likely to draw to next? And some of you are like, well, that's the problem. If I could just know what the bias is. I've already taught you bias. The problem is you haven't done the work to practice and get good at it. And guess what? Some of you want bias to be perfectly accurate for yourself every single day. And I'm not that way either. I'm not accurate every single day. I'm requiring things to support the ideas I'm looking for. Sometimes I get it, sometimes I don't. And I know when I'm likely to get it wrong, which is non-farm payroll weeks after Wednesday, New York session. I'm probably going to get it wrong. So if I know when that's likely to occur, guess what I'm doing? I'm sparing myself the grief. I'm going to be focusing on times when I'm feeling more in tune with the marketplace and the market's more likely to give me what I'm looking for, regardless of what model I'm using. So now, because you have all these models in front of you, some of you probably still feel confused. That's normal, because you have to go through the work of going through each one of these models, or one of them, and figure out which one you want to work on. And it may build your expectations about something else that's not specifically taught in one of these models. And you might blend something from another one, and then that becomes your unique model. It's happened already, folks. I got students that have done that. Or a framework from one model, but an entry strategy in logic with another, or maybe two, and blending that together. Because all these concepts of mine, again, are like that jigsaw puzzle where they all connect. And all you need to know is this one little thing like this, where it goes here and it's probably going to go above there. You don't need to know it's going to go up there. Don't be like the yahoos over there on Instagram, Twitter, and Facebook, who want to make you believe that they knew this high was going to form, or they're always doing 200 to 1 R multiple trades, or 50 to 1 R multiple trades, but yet they're still showing examples where they're only trading with one micro lot. Does the math support that? No. No. So all you're looking for is these small little surgical strikes with this model. Small little get in and get out, hit and run trading. Okay? That's what I used to call it on America Online. Get in, get your money, and run. And let them have all the extra you leave on the table. Who cares? This pattern repeats so many times, you don't need the full move. But you understand how to leave a runner on after taking the bulk of your trade off. So if you took this long here, and you know you're looking for this previous day's high to be taken out, but you also have these relative equal highs, 80% of your trade comes off as soon as it crosses that candle's high. One pipette, just one pipette above that, you're done. 80% of the trade comes off, bang, you roll your stop to something plus, break even. You don't want to be just at break even. You want to put something in your pocket in case it comes back against you. And let's see what it does. In this event, it goes above this high here. We'll call it 25. It's 10, 20, 30 pips. Well, you know about that, right? 10, 20, 30 pips above an old high or below an old low. There it is. That's where you can take your scaling. 80% comes off here, so that means you got 20%, right? Well, if it runs up 10 pips more, take another partial off. Let the runner go to another objective of 10 or 15 or 20. And then, or trail your stop loss underneath the candles. When they close, squeeze it up there. That's coming out of Alexander Elder's book, Trading for a Living. I did that a lot as a commodity trader, and it always used to come back and knock me out because institutional ortho entry drill that I didn't know about then, and they would take me out. And then it would continuously move up, and I'd be mad I didn't get that last 4 cents in the grain market. I missed $200, and I was mad about that. And sometimes I would get stopped out and go back in, mad because they stopped me out, not realizing that it's about to turn around and go the other direction. So anyway, I digress. I believe that you have been equipped with, in my opinion, and I'm obviously biased, but I believe I have equipped you with the absolute best in terms of technical understanding. I've given you skills and concepts that will hopefully serve you and your family exceedingly well. Will all of you become millionaires? No. Will you be better than the average person out there trading? I believe yes. But I'm biased. If you've been fumbling around through the content and not really been serious about doing it, just Netflix watching, just putting videos in and watching them and seeing what happens and thinking that's going to do it, hopefully by now you've discovered that that's not what it is. Look around. Everybody that's doing these trades and showing you examples, they're in there working really hard. They're hungry. They want to get it and learn it. And because some of you are acting all bougie, like you're in here, like this is the, there's a place down in Florida called 30A, and we frequent it a lot down here. And these people are very snobbish, like very snooty. And for the life of me, I don't understand why. Why do you think that way about themselves? But I'm walking through there. I probably got more money than all of them. And that's sometimes the attitude that my veteran students have here. Okay. It's like, well, I don't need to do that. But if you're not really doing well in the content, just because you're part of our community, you're really not doing what it is you should be doing. So what's holding you back? You have to do it. And it might be you don't want to feel like you've done it wrong. So it just feels better to entertain yourself watching videos and keep telling yourself, oh, well, there's something that will happen. He'll teach something easy and it'll be like a push a button. It'll jump off the page and there it is. That has never happened yet, has it? The closest thing is what I've given on YouTube. That's the closest it's going to get. There's nothing else that can make it any easier than that. Like that is the limit of ICT, making it simple. I cannot make it any more plainer than that. So if none of these models here have scratched that itch, and the YouTube model hasn't scratched the itch for you, I'm tapped out, folks. Okay? There's nothing else I can do to make it happen for you. You have to put the work behind it. You got to roll your sleeves up and say, you know what? I want to get in here and do it. Because there is no other videos now. You're listening to the last one. This is the last ICT mentorship video. Anything that goes on inside of our mentorship now will be posted in the forum. It'll be posted by me as a chart. There won't be any of that tonight because you have had a number of these videos, these price action model algorithmic videos posted to the forum tonight. So you all have them now, be downloading them, watching them or whatever, or completing the rest of your downloading. I've extended the grace period to Friday at 9 o'clock. At 9 o'clock, the forum will have only the charter member area in it. There will not be any commentary section threads. There will not be any kind of price action model threads. So you need to download these videos, folks. Okay? And put them where you feel secure in having them. And then we'll continue, obviously, on our journey together in the forum, much like it was on Baby Pips, where we all communicated, typing out things and sharing charts. Trust me, I love that because it's quick, it's easy, it's efficient, and I don't have to do all these videos anymore. And I don't want my life to be all this, okay? I want to teach, I want to enjoy teaching, but I need my time back. And you'll have your time back too. You won't be sitting and listening to these long-winded, droning on messages that you probably don't want to listen to. But for all of you that have come this far, I want to congratulate you. You have endured some of the hardest things to learn. You may not have them underneath your belt yet. You may not be proficient with all of it yet. But you have endured what many people have come into my company and started to learn and for whatever reason tapped out and said, I can't do it. You didn't. That deserves an applaud because it's so easy to tap out because it's not easy learning it. It's not easy encountering those demons that every one of us have. And these charts are mirrors. They're going to reflect back what you have inside. If you're angry, impatient, you're going to see that in these charts, and it's going to manifest in your actions. If you're scared and apprehensive, these charts are going to show that, and it's going to manifest in your trades. If you're grounded, you're not moved by emotion, you don't fear missing anything, and you're not greedy, it's going to manifest itself in your trades. And you're going to be consistently moving in the right direction with that mindset. It's been my goal, and will remain to be my goal, to have all of you get aligned with that latter mindset. However, you have to prune all those bad habits that you know what they are. When you're journaling, you keep the bad, toxic stuff out. When you're in the forum, you don't post anything negative. Not because I want it sugary sweet and bubble gums and gumdrops in here, but there's a way of talking about adversity. Being all emotional about it or angry and venting. This is not where you do that. You don't do it in your journal either. Take yourself a drive and talk to yourself. Say, I need this to be handled, but then get it out of your system, but then go back to your journal and then self-talk. Cheerlead yourself. Go back into the charts and you'll see that it is therapy. Or don't. And stay exactly how you are right now. Because unless you make changes in the order of what you do, in the processes that you do, you're not going to get better at this. Because you have to take action. You have to put effort behind it. And the amount of effort that you think you've already put in, it's probably not even close to what's required for your unique experience. So are you going to quit? You're going to tap out and say, it's too hard. It didn't happen for me. I already went to the charter level, went to the last price action model. He gave us all this stuff and I don't know how to do it yet. When there's other people already doing it. So the question is why are they able to do it and you're not? They're doing something that you aren't. What is that? Continuously trying to improve. And that's all you need to do. It'll happen for you. You just got to trust the process, and it may take longer than what you originally thought. Exactly how I promised it would be. Until I'll talk to you next time in the forum, not in video. Obviously, you'll probably hear me in YouTube tomorrow night, but in the forum, we will be communicating by way of threads. The thread will be locked down for me only, so that way it won't be cluttered up, but it'll be my post. That way everyone can track what I'm doing on a day-by-day basis. And I think that's going to be it. Until I'll talk to you next time. Be safe.